Friends, greetings to you all. Before we move on to today's review, let's recall how yesterday's ended. Let me remind you, this is the long position from July 8th, which we opened together. I'm still holding it and even considering increasing my position. As you can see, yesterday we decided to open a long position precisely in the buyer's zone. Now the price has already gone up, as we can all see. But today's review isn't about the market going up, it's about something else. And the question is this: since yesterday, has there been even a single change that would make it necessary to close this long position? I deliberately record my reviews in the morning. Right now it's 9:50 because I want to make decisions before the market shows any results rather than explaining price movements after the fact. Again, I do this for you. So even if by the time this video is published the price has already moved higher or lower, that's not the main issue for me. The main thing is whether the behavior of major market participants, such as market makers, algorithms, and, let's say, other crypto business owners, has changed. If it has changed, then I will change my decision. If not, then yesterday's scenario remains valid, the one we considered in terms of opening long positions. Let's check what has changed since yesterday. So let's start with the main point, and that of course is the limit order metrics. I already have a number of these metrics loaded, but we'll look at them one by one. And it was precisely yesterday that they showed Bitcoin had entered the buying zone within this range, entered the buyer zone, which is why we opened a long position. Today the picture is already a bit different. The price has moved out of the buyer's zone, which means that opening a new long from the current price, which is 63,980, is something I would no longer do. I prefer to make purchases specifically in the buyer's zones, just like we did yesterday, and also on July 13th, where, by the way, we talked about this as well. Just like on July 8th, where I still have an open long position that I haven't closed yet, and which we also discussed together. But the next question arises, is this a reason to close yesterday's long? That is, the fact that we have already exited the buyer's zone. In my opinion, no, because there is a big difference between the phrases not opening a new long and closing an already open long. If the position was entered where it was justified, then exiting it just because the price has gone up is certainly not the best idea, as we clearly understand. Therefore, for now, my decision remains the same. I'm holding the long position and the stop has already been moved to break-even under July 13th. I wrote about this in my chat. Yesterday at 12:11, when the price was 62,729 and Bitcoin entered the buyer's zone, I wrote that I expected to see growth and also mentioned that I was adding to my long position. But since one metric is not enough to make a final decision, let's now take a look at what is happening with the limit seller. If the seller has really started to return to the market, this is exactly where we should see it. That is why I'm now opening the metric where we can look at the intentions of the limit sellers and draw some certain and clear conclusions. If yesterday's scenario is no longer relevant, then this is exactly where we should see the first signs. I've opened the short preset, and the first thing that stands out is that the seller's zone has shifted. Previously, the limit seller was actively operating in this range. That is, you can see this from July 4th to July 6th. Notice that the green line crossed the red line at this point. It was right here that Bitcoin stopped, and at that moment, many altcoins showed a rather deep correction. To back up my words, let's take the example of the Near coin, a coin that just came to mind first. We can see that as soon as the market entered the seller's zone, Near corrected by 11%. Even though Bitcoin at that moment didn't really show us much volatility, the price is already above the level. Pay attention to this right now. In other words, where the limit seller started to act last time, the price is now already above those levels, but at the same time, we are still far from being in the seller's zone. That is, there is no intersection of the lines, and the difference between them is almost $150 million if we're talking about the numbers. In other words, in terms of money. For me, this is certainly an important signal because it turns out that the levels from which there was active selling not long ago are now being passed by the market almost without resistance. So, not only is the price changing, but the behavior of major market participants is also changing. Right now, as I see in Telegram chats, and not only in Telegram chats, many people are expecting the correction to continue. I also see this in the comments, among other things. And in principle, I do not rule out such a scenario. But the question is different. Is there currently any data confirming that the correction should start exactly from here? So far, I don't see that. First of all, each new buyer zone is higher than the previous one. Let me show you. Here we had a buyer zone yesterday. Before that, on July 13th, there was a buyer zone. Before that, on July 8th, there was a buyer zone already in this area. And before that, it was on June 30th. And each new buyer zone does not update the previous low on Bitcoin, which is very positive and indicates that Bitcoin is being prepared for further growth. That is, large limit buyers are ready to buy Bitcoin at higher prices. And, as I already mentioned, this kind of behavior usually indicates preparation not for a decline, but rather, on the contrary, to push the price higher. Secondly, those specific price levels where the limit seller was clearly active before, specifically right at this level, yes, at this exact price on Bitcoin within this particular range, the very level where the limit seller was active last time, they are now effectively turning into strong buyer zones. In other words, we corrected, and instead of coming into the seller's zone like last time, yes, we were in the seller's zone here, we have now entered the buyer's zone at the same price levels. So the forces are switching places. That's why it feels like the market is literally changing its attitude toward the same prices. And if just 2 weeks ago people were selling here, today they're already buying in this area. And in my opinion, this is much more important than the actual price of Bitcoin. As long as this dynamic continues, I still haven't found a reason to close yesterday's long position. But it's still too early to draw any final conclusions. Let's see if the other metrics confirm this. The next metric we'll look at is the delta metric. I'm opening it right now. This particular metric often helps us understand whether the market is starting to lose momentum. Yesterday, when Bitcoin entered the buyer's zone, I mentioned that it was a good spot to open a long position. Today, I'm interested in a different question. Are there any signs that this upward movement is starting to slow down? And here, again, I'm not looking at the price, but at the positioning of the lines. Notice that right now, they are at different distances from each other. That is, the green line is separated from the red one, and overall, the range from the green line to the blue line is about 0.5 to 1.5 points. Right now, the distance from the green line to the blue line is approximately 1.6, which is actually quite a significant gap. Why is this so important to notice? It is because a price movement usually stops when all three of these lines start to converge almost into a single point, exactly as it happened previously in this specific range. This is called the sticking effect. That is when all three lines converge together into one, as it was in this range, after which we witnessed a downward drop and in all other distinct ranges that we can observe. Here, for example, all three lines converged into one, and after that we saw a correction. It is at this moment that the limit seller starts placing large sell orders simultaneously at different depths, specifically at 1.5%, 3%, and 5%. And very often it is right after this that the growth starts to slow down, or stops altogether, or a correction begins. Right now, this is not the case. The lines are still far apart from each other, which means I don't see any signs yet that the seller has started to massively hold back the movement. So, this metric also does not yet provide any reason to change yesterday's decision. But let's move on. Let's take a look at the 5% depth. I'm going to remove the other depths that we see on this metric for now. First, I'll remove all the drawing objects and mark the upper boundary that is formed in this range at the 5% depth level, which is the extremum. And historically, strong corrections only began when the value of this metric reached the upper boundary and stayed near it for some time. As it did, for example, in this range, as well as in this range, and also right here, right? In other words, when we linger at this line, right now we haven't even reached those values yet. So, what do we see happening now? We haven't even reached those values yet. In other words, we haven't entered this seller's zone. We haven't even touched it. There was an attempt to get closer at this point, but so far there hasn't been a full entry into the overheated area. This means that the goal of the movement that started yesterday from the buyer's zone has not been achieved. And this is indeed a serious argument. This means that the goal of the movement that started yesterday from the buyer's zone has, with high probability, still not been achieved. So far, I have checked several independent metrics and none of them indicate that major market participants have started to reverse it. But there is one more check. Let's look at the ratio metric, which also shows us the ratio of limit buy and sell orders. If signs of overheating start to appear here as well, then we'll have our first truly serious reason to consider taking profits. The ratio helps us understand how close the market is to those levels after which a correction usually begins. And here, I always ask myself the same question. Has the market reached a level where yesterday's long position is no longer profitable to hold? Let's take a look. On the chart, it's clearly visible where there is a range, after reaching which the market regularly starts to slow down or enters a correction. Examples. This happened in this range, it also happened in this range, and so on. Here, by the way, this also happened in this range, and for a while the market paused, the growth stopped, after which there was a sideways consolidation, and then prices continued to rise. But right now we haven't reached these levels yet, meaning we haven't reached the upper boundary. So this metric indicates that the movement which started yesterday from the buyer's zone does not yet appear to be finished, which means I still don't have another reason to close the position. But as I already mentioned, I never make decisions based on just one group of metrics. Therefore, let's move on to the next block now, the margin metrics. And here, in my opinion, the picture is even more interesting. Over the past 24 hours, margin traders have returned loans to exchanges totaling approximately $173 million, bringing the amount down to $165 million. In other words, they started to reduce their long positions, which, by the way, they had accumulated at local highs. That is, they took out loans at local highs to go long on altcoins and have now already returned those loans at a loss. And here's what's most interesting. And by the way, this might seem strange. The price is rising, but many participants are exiting their long positions. You can see this because the metric is declining. They don't believe that the growth will continue. But for me, on the contrary, this is a good signal. Why? Because the market is getting rid of excess, let's say, leverage. Right now we're talking about margin loans. When most people have already taken on borrowed funds, any downward movement can trigger a chain of liquidations. That's understandable. Now, the opposite is happening. People are returning coins to the exchange as the price rises, which means that, potentially, the pressure from overloaded margin longs is decreasing. Moreover, if you look at this history, the strongest corrections usually started when the amount of loans per day reached the levels I mentioned, that is, around 160 million. At least that's true for the phase of the market we're currently in. Let's check. This specific movement occurred on July 11th. Also on July 15th and on July 7th. These were points of market correction in this price range as well. Our upward growth came to a halt and the unloading happened through a sideways movement. And after that, it also happened on June 29th. Yes, these were points of correction. Even though they aren't as significant as, say, from the 250 million level, they still work as an intermediate level for this phase of the market right now. And what's the focus here? When we reached these values, it indicated a sign of local overheating, but now we're seeing the opposite picture. Traders are not increasing their longs. On the contrary, they are reducing them, even though the price is already recovering and approaching the previous local highs. Therefore, according to this metric as well, I still don't see any reason to change yesterday's decision. By the way, margin loans have already cooled down to the levels where rebound started for us last time. And this is a positive sign because, as I've shown, this is happening precisely during the price increase, with coins being returned. There remains one last check, and that is funding. It is funding that will show which side the crowd is currently on. If the majority is already buying aggressively, that would be a reason to think twice. But if the crowd, on the contrary, starts opening short positions, the picture could turn out to be completely different. If the market has truly reached a turning point, this is exactly where we should see that the majority of participants already believe in further growth. In other words, the funding rate for the long group should become higher than the negative funding rate. This is the point where local highs are set, and after that, significant corrections usually follow because the market starts hunting for longs. I won't go into too much detail right now about how the metrics work on our developed service, Trading Platform Pro. You can learn more about this on my Telegram channel. By following the pinned post, you'll be taken to the Academy of Educational Materials, where you can read about how each metric works and watch videos. There is a video and a trading strategy presentation for each post. We examine the operation of each metric. All of this is covered in detail here. I won't overload you with this information on YouTube. So, what's the idea? The point is that right now, this shift isn't happening. On the contrary, the number of short trades is increasing. Currently, 17% of all Binance futures pairs are being shorted so heavily that the futures price becomes cheaper than the spot price. And when we reach similar values, we saw rebounds again. Just like it happened here, just like it happened in this range, and just like it will happen now, we are already approaching it. And what I like is that this is happening as the price is rising. This is very positive. People don't believe in the continuation of the growth and are opening short trades right now. In other words, the price is going up, while the majority of the market is actually betting on a decline. For me, this is a good signal because strong upward movements rarely end at the moment when most people are still expecting a drop. As a rule, the market first forces these participants to close their short positions, and only after that does it start to form a more serious correction. Based on the funding rate as well, I don't see any reason to change yesterday's decision. Let's sum up. Today, I specifically looked for arguments that would make it no longer worth holding yesterday's long position. We checked the limit order metrics, we checked the delta, we checked the ratio, we checked margin loans and the funding rate. And what did we find? None of these metrics have yet confirmed that the behavior of major market participants has changed enough to abandon yesterday's scenario. Yes, I wouldn't open a new long position from the current levels anymore. In my opinion, that opportunity has been missed. That should have been done yesterday, and we talked about it. But that doesn't mean you should close the long position that was opened yesterday in the buyer's zone. So my decision remains the same. I'm continuing to hold the position. The stop has already been moved to break even below the July 13th low because I started building the long position on July 8th in the beta buyer's zone, added to it yesterday, and moved the stop to profit below July 13th. Whether there will be at least one metric tomorrow that will make me change today's decision, we'll check that in the next review. Thank you for watching. If you're interested in this kind of approach, where decisions are made not based on emotions or price, but on the actions of major market participants and grounded in numbers, be sure to subscribe to this YouTube channel. Here, you can make money. And head over to my Telegram where you can get a more detailed look at the metrics of the trading platform pro service I develop. That's all from me for now. See you in the next episode. Thank you all. Goodbye, everyone.